Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Thank you for inviting me on your show.
Well, we just saw on the Business News Network a little crawl across the screen that said there's been a 30% drop in home sales in Greater Vancouver year to year, ending in March. Are you surprised by that number, and what would account for that?
You know, I'm not surprised. We were driving around West Van out by Horseshoe Bay about a month ago, and it's really just amazing how many listings there are, homes with for sale signs on them. So. And of course, one of the things that happens when there's so much product available, is people get pickier, right? So they, if they thought before they could live with a single car garage, and they think, well, gee, there's so much, maybe we'll hold out for a double garage, or different things like that. So that it actually reduces the number of sales. So sales plummet, and then of course, it doesn't surprise me at all. And what we haven't seen yet in Vancouver and Toronto, but I suspect we will see fairly soon, is the impact of what happens when people go up for renewal on their mortgage. So with the new rules now, and now I'm going to venture into guessing, because nobody knows. It's been so long since this has happened that nobody knows what's going to happen. At least I haven't found anybody that knows. And what happens when you go to renew a mortgage after the 5-year window is up, and the appraisal comes back and it's below the value of the mortgage. So this is what in the U.S. they call being upside down on your mortgage. And it's been so long in Canada that we've experienced that. We don't know if the bank or the other lender is going to be able to. First of all, we don't know legally if they're allowed to renew. And secondly, we don't know what their attitude is going to be. Now, for the people that are in that position, there's one comfort, and that is if there's so many people that are in that position, I imagine either the bank or the government will rule and tell the banks, listen, don't foreclose on all those houses just because they're underwater on their mortgage. Because what's the point of putting them all out of their house and have, there's no way they're going to be able to sell. So getting back to the drop in activity, this phase could go on for quite a long time, where there's just very few sales because the sellers and the buyers are so wide apart in their price expectations. But at some point, whether it be the lender or some other factor, starts triggering sales, and that's when you find out what the real price is. Because we don't know. When there's so few sales, we don't know what the real price would be. The numbers are coming out that prices have dropped, but we don't know until we actually see a significant volume of sales.
Well, what's going on in Toronto? Are they reporting prices are down?
They're reporting, and I have to give credit. I must admit, I've been skeptical about the Canadian Real Estate Association and the Toronto Real Estate Board, because they had a habit of putting out different price indexes depending on what they wanted to show. So when prices were rising, sometimes they show the median price, sometimes they show the average price, sometimes they show the typical price. On their website, they even talk about scrubbing the data, and what they mean is they just take out anything that's kind of anomalous, like a really high or low price, to make it more representative. And then some of the there's another index that's put out by Terranet National Bank, and they use a 3-month moving average rather than and they're also behind by about 3 months because they get the data from a different source, but it turns out to be the same data eventually. So all of those things. I was skeptical, but they actually are reporting. So in the single family home, or which they call the detached house, the prices are down 17% in Toronto, and in some parts of the suburbs of Toronto, They don't report this, but I know from other sources that the prices are down more than 20%. So you have to go back to 1990 before you find a time when prices have dropped this much, and it's not over yet, because so this is April, early April, so these are the prices for March. The prices for April are going to be worse, even if prices don't fall, because last year in April in Toronto was the peak. So prices actually went up quite a bit last year from March to April. I don't know the exact percentage. So this year, the year-over-year decline is going to be even bigger, because we're basing it off a peak month of April last year. So and the listings are extremely plentiful, especially in the more expensive end, the 1 million and up end. So the average price has come down 17%, but in certain pockets it's down more than 20%.
We'll have more with Hilliard MacBeth right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799. I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, I can see how it would be quite hard when you have a drop in the sales volume to try to determine what the prices are. And I look at how assessments are done, at least in BC. I know in my very own condo building, one apartment sold for $700,000, another sold for $350,000. So my assessed value is the average between the two, and I can tell you my place is not worth that much.
Well, don't say that. You might want to sell it, but no,
it's already sold.
it's an unscientific method, that's for sure. And then I've talked to a number of people, and they say, "Well, Hilliard, your prediction that there's going to be a housing bubble bursting soon. What happens? That should be good for my assessed value. It should be good for my taxes." But the bad news is the government basically doesn't work that way. So if the assessed values for all of the properties drop, say 20%, just to use that as a benchmark, you'd think, well, I'm going to save 20% of my taxes, but they don't work that way. The municipality, Vancouver, Toronto, Edmonton, they figure out how much money they need to spend, and then they look at the assessed value, and then they adjust the mill rate. So the mill rate would go up, and you end up paying roughly the same taxes. And by the way, the taxes in Vancouver are much lower than taxes in Edmonton and Calgary. So, it may be that even with assessed values going down, taxes could go up. But getting back to the main point of house prices dropping, we still don't have the situation where people are forced to sell either by the lender or by their own circumstances in a widespread basis. So people that are looking for bargains and for the bottom, could be, and I don't know. There's always special circumstances in every market. Every market's different to a degree, but they could be rewarded by waiting a little while longer, because we're seeing prices come down, but we haven't seen that situation where people either through foreclosure or bankruptcy or whatever are forced to sell at ridiculously low prices. It's happened in the 80s and the 90s in Canada, and it happened more recently in 2009, 2010 in the U.S.
Sure. Vegas was a great example. $600,000 condos being sold for $40,000 right after their housing crisis.
Yeah, and that's the thing too, is the mix. So that they do mention on these things, and this is again why the index is flawed in a way, because if you have a huge number of condos, as you're seeing in Vancouver and to some degree in Toronto, and prices are still rising a bit on condos because that's all people can afford to buy. It could drag the index down or it could drag it up, depending on whether if no single-family homes sell for more than $1 million in West Van, and you're looking at the greater Vancouver area, then the average price might drop just because you didn't have any sales in that category. Because obviously those are the $2-3 million homes. So it's really what people should do, and it would be difficult to do this. And, Teranet National Bank tries to do this, but I don't think they succeed completely, is to try and get identical houses selling, without any, or adjusting for, renovations and improvements and that sort of thing. If somebody adds a double garage on the back or something, and then figuring out what the price is, whether it's gone up or down. But, there's no real incentive for anybody to do that, and so you're not going to see it. So, the bottom in the U.S., getting back to what you said, it was skewed a bit by a whole bunch of apartments in places like Las Vegas, Nevada, that were selling for like $20,000-$30,000, and they were selling at auction on the steps of the court. So, I mean, I don't know if that got included in the index or not, because that's the other thing is some of these indexes don't include homes that are sold privately or sold by foreclosure, and so. We'll never know. We'll never know the full story, but we do know this, and that is that year over year in Toronto, the peak was about April 2017, and the peak in single-family home in Vancouver was earlier. It was actually in 2016, and the peaks in Edmonton, Calgary were even earlier than that. So we're in the early days of this, though, because this is a multi-year process.
Hilliard, do we have distressed tax sales in Canada? I know in several jurisdictions in the U.S., if you owe $10,000 in taxes, the city can seize your property and they'll just sell it for $10,000 to cover the tax bill, and they don't worry about the rest of the house. Can they do that, or do they do that in Canada?
They sure do. So the number one claim on a title on a property is the taxes owing to usually to the city or the municipality or the county. And if it's not worth, if you can't sell it, usually it would be bare land. It wouldn't have a house on it, but I guess occasionally it might have a house on it. But it certainly happened in the Depression, and even as recently as the 80s in Alberta and Saskatchewan it happened, where it just wasn't worth hanging on to it. So people just stopped paying the taxes, and eventually, I don't know the exact mechanism. I imagine the city or the county sends out a notice saying, we're gonna, put this up. We're gonna seize this if you don't pay the taxes. But what's the point if you don't have a buyer for the land? And so people just let it go back to the city. There was a story in a really interesting book, Diary of a Depression, it's called, and a story out of the U.S. in Ohio, Youngstown, Ohio, and the guy, the people would line up at auctions for these properties that had gone back for taxes, or the bank had got a hold of them, and they would bid on them. And the story was from 1931, and it turned out they were way too early to be lining up because the prices kept, and so they bought them, and then they eventually reverted again. So not only can it revert to the city for taxes, it can revert the second or third time if the person buying it, because you can go to the city then and buy it by paying the back taxes. But then if you don't have a use for it, and then you end up doing the same thing by letting it go back to the city for taxes. So, and of course that's devastating to the municipality, because then they don't have the revenues to fix the potholes and all that stuff. So it's we're a long way from that. I mean, they still got, especially Vancouver, has just got a very large revenue flow, and it's unlikely to dry up anytime soon.
We'll have more with Hilliard MacBeth right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, could one of the reasons for the slowdown be the new stress tests that people have to undergo to qualify for mortgage insurance? And also, with rising interest rates, can they even afford the houses that are listed right now?
You know, those are key points. And so with the new stress tests, of course, they're applying a stricter standard for when people go to apply for a mortgage. They say, how much income do you have? How much monthly mortgage payment can you afford? And before the changes, it was quite generous. So people, I talked to lots of people that had 150, 200,000 in combined income, two people working, and they were offered $1 million in mortgage debt. And it seems like those days are over now. So with the new stress test, and they actually found, so this is interesting, and it shows you how the system works too. When they applied that stress test to the insured mortgages, the CMHC was the first, and the other two insurers were the first ones to get hit with this. They made it more stringent, and they basically found that a whole bunch of people couldn't qualify for the mortgages anymore. So the next thing that happens, within 3 or 4 months, there was this enormous surge in uninsured mortgages. Now, uninsured mortgages, of course, as your listeners know, you have to have a 20% down payment. So then the government got all concerned and said, well, what's going on here? How come all of a sudden these people can afford a down payment when they couldn't? So, of course, they probably couldn't afford 20% down payment, but they were finding another source, whether it be the Bank of Mom and Dad or just borrowing on the private lending market or something like that. So then they thought, oh, we got to stop that. So then they applied the stress test to the uninsured mortgages, even the people that had 20% down, which before wasn't tested at all. It was just everybody assumed, including the bank that, or the other lender, that if you got 20% down, how could anything go wrong? So now those people have to qualify. It turns out they can't qualify either. So now we've got a horrendous situation. And then on top of all that, to make it even like a triple whammy, the interest rates have been rising. So the stress test is designed to pretend that interest rates are higher than they are, and now actual interest rates are actually going up. So the combination of all that is that there's a whole bunch of people out there that used to qualify that don't qualify anymore. And I think that's why you're seeing lower priced condos selling still quite actively, because there's still, I'm shocked at this, but it's true. There's still just a really widespread belief that buying a property is the right thing to do among all kinds of people, young and old. So people are able to ignore the fact that prices are down 17% year over year, and they still want to buy something. They end up buying a condo, which I would recommend not doing that, but people are just really desperate to buy. So that's what they end up doing. So all it's done is push, so people can't qualify now for the more expensive property. They're just being pushed down into the less expensive property. So in Vancouver, especially, condo prices were rising quite rapidly because people found that's all they could afford. But that won't last very long because it doesn't make any sense. If you can get a single family home 20-30% cheaper than you could a couple of years ago, that's a much better purchase than a condo that's overpriced and isn't likely to hold its value.
Well, RBC just released a study showing Canadians' intention to buy a home is at an 8-year high. But does intention turn into real numbers?
We went from this thing where people looked at the total value, for instance, just to use that example, if somebody borrows $1 million to buy something, I don't know if very many people did it, but obviously somebody did it. But certainly the lenders were offering that. In a lot of cases, they end up spending $2 million because the interest on the loan turns out to be similar to the actual original loan. So is that bungalow, that 30-year-old bungalow really worth $2 million plus the down payment. So it just, the 2.2 million dollars just doesn't make any sense. But when people get caught up in this idea, and I've run into this, like I'm working with some younger people sometimes, and I encourage them to rent rather than buy. But it's a very much an uphill battle because everybody they talk to is urging them to buy, and then when they tell them, well, we've found a good rental, other people either directly challenge them and say, what are you doing? Why aren't you buying? Or they just look at them like they're losers, right? So it's and there are some problems with renting. I think you and I were chatting before about the landlord can turf you out and that sort of thing. But financially, if prices are dropping, it's way, way better financially than stepping up to buy something.
Hilliard, thank you so much for chatting with us.
Nice to talk again. Thank you.
My guest has been Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. If you have any questions for Hilliard or any of our other guests, they can be emailed to info@housestreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.